Good afternoon. Thanks for tuning in. You're watching Ask BQ on BloombergQuint Live. I'm Navneet Saluja D'Souza.
Good afternoon, Navneet. I'm Agam Vakil. If you got questions on equity, this show is perfect for you. Send your questions to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-4540-4141 or mail us at askbq@bloombergquint.com. Just make sure you do add the Ask BQ hashtag.
All right, but before we get to the individual queries on the show, here's a quick look as to what's happening with the markets. I think the good news is we've sustained more or less the opening gains, though we could be off the opening levels, but still Nifty is sitting with healthy gains right now of about 170 points in trades, Sensex up about 600 points. You've got gains coming across the board, so even the broader markets, mid-cap and small-cap indices are up between 1 to 1.5%. Market breadth is looking good as opposed to what happened on Friday, where market breadth was in favor of the declines. And you've got volatility index also cooling off a bit by 6 to 7%. Remember, on Friday, it had gone up by almost 30%. 21.5 are still elevated levels for the bulls if the markets were to sustain these gains. Let's see if the volatility cools off further or not. But on that note, let's also pull up the Nifty Contributors list and tell you which are the stocks which are contributing to the gains. So it goes without saying, these are all dominated by heavyweights. So ICICI Bank is contributing nearly 30 points. Infi is up and about. HDFC, Reliance, a couple of your other counters. What's capping the moves are the likes of Kotak, Bajaj Auto, Axis Bank, which are trading with some bit of cuts. All your sectoral indices are also trading with gains, and the biggest gainers there are Nifty IT, which was down sharply on Friday. So that's bounced back. You've got something like HCL Technologies, which is up about 4% today. Nifty Metals Index is also rebounded by almost 2%, and Pharma is up and about by almost 2% in trade. A couple of gainers I want to highlight. Escorts is up and about on back of good sales number for the month of February. You had the tractor sales moving up by almost 18% on year-on-year basis. India Bulls Housing has given up the opening gains, but it's still sitting with gains about 9%. And Godrej Consumer also bouncing from the lower levels. It's crossed the mark of 600. On the losing side, even in a market like today's, no respite for Motherson Sumi. It's down another 3.5% and heading towards a double-digit number now. So 100 is the level where Motherson Sumi trades. Avenue Supermarts is down because it's been moved to T2T category, and that's pretty surprising for a company which has a market cap of about 1.5 lakh crore, and that one's been moved to T2T. And you've also got something like Apollo Tyres, which is not doing well in trade. That's down by about almost 3%, Agam.
Okay, it's time to get in our experts for the day. We have Amar Singh of Angel Broking and Gaurang Shah of Geojit Financial Services, who are here to answer all your queries. Welcome to the show, guys, and thanks for joining in. I'm going to take up the first email query, which comes from Pragya Das, who writes to us. She says she wants to invest 5 lakh into equities and wants to know between Hindustan Unilever, HDFC Limited and TCS, which of the three is the better bet for the long term? Gaurang, good afternoon. Let me take this one up with you. Between Hindustan Unilever, HDFC Limited and TCS, where would your preferences lie?
Thanks, Agam, and good afternoon to all of you also. Fundamentally, we always advise investors that you should not put all your money into a single sector or a stock in that sector, because that increases the risk, and it is always prudent to deleverage your risk by investing into different sectors and performing stocks in those sectors. So my advice to this investor would be that break up your 5 lakhs of rupees into 3 parts, each equally, proportionately. And we are positive on all the 3 names, HUL, HDFC, as well as the third counter that you mentioned. I'm sorry, which was the third one, Agam?
It's TCS.
So yeah, we remain positive on all 3, HUL, HDFC and TCS. So my advice would be to distribute this 5 lakhs proportionately on all 3 stocks from a long-term point of view.
Okay, so don't put all your eggs in one basket. You can distribute in all the 3 stocks. And by the way, Gaurang likes all 3, HUL, HDFC and TCS. Let me take a technical query on that note. One of our viewers is holding Bandhan Bank at levels of 403. He wants to know what should be the target and stop loss, and also if he should add more at current levels or he should look to switch to something like SBI. Amar, hi, good afternoon. What's the view on Bandhan, which is up and about 5% in trade? If somebody is holding at levels of 403, would you advise to stay put? If yes, what should be the target and stop loss?
Yeah, I would say that looking at Bandhan Bank technically on the charts, it has corrected significantly as recently as 12th of February from 480 levels. It made a low of 370. So I would say that he should definitely hold on to his position, because what we've seen that the last couple of days there has been huge buying in this stock, and the delivery quantity has been significantly higher as compared to many months. So I would suggest that he can hold on to his position. What he needs to remember is that 406, 410 is a crucial zone of resistance. If that is taken out, then the stock can rally towards 418, 420, where he could book his profits.
Okay. Well, we have a question from Electronic Videos, and it's on Info Edge. Well, the viewer has got in Info Edge at around 2,534. Wants to know if there could be, we could add more, a target and a stop loss here. So Amar, I'll come back to you on this one. What levels are you playing with, and would you ask the viewer to, book profits or add more, and if so, what levels?
Yeah, I would say that looking at Info Edge definitely is strong and positive on the long-term charts. But on the daily and the weekly charts, we are seeing some sort of consolidation. So there is one level to watch out for, that is 2750, 2760. If the stock is not able to take out that level in a couple of hours, I would say recommend to book profits, because if it's not able to take out, then we could witness some profit booking. On the downside, the stock has got now very strong support coming at around 2550, 2600 levels.
Right, remember it's been a relatively stronger counter. Even on Fridays, the stock ended off the day's low. Let me take Vishal Singh's query. He's bought 1,000 shares of Tata Motors at levels of 80. He's a long-term investor. He wants to know if he should look to average fundamentally, Tata Power, pardon me, should he look to average fundamentally at current levels? Gaurang, what would you suggest? The stock is off almost 40-45% from its entry level. Do you think these are good levels, 40-45, to average his investment if he's willing to hold on for a long term?
So Navneet, the power generation has always been a tricky business in India, given the political fallout of elections on the power sector. Most of the political parties giving freebies in terms of X number of units, you don't have to pay any bill for the electricity that you consume. But having said that, we have remained positive on Tata Power for a very long time. And now with the renewed foray into charging infrastructure for e-vehicles, of course, there is a lot of clarity that needs to come. And more importantly, the Mundra mega power unit resolution could add to the positivity. So I would say that given the correction and the level wherein the investor has got invested, maybe 25 to 40% of the total quantity that he has, he can average at current levels. But let me say this, Navneet, that it's going to be a long-term wait and a lot of patience would be required.
All right. Well, from there on, we move on to a question from Abhijit, and his question is on Midhani, where the viewers holding it at from 160. Short-term levels is what the viewer wants right now. Midhani is currently at 260, so a clear-cut 100-point gain coming in. Well, Amar, what would you suggest the viewer to do? Book profits, hold on, and if so, what levels?
Yeah, I would say looking at this stock continues to trade positive, and in spite of the market correcting, the stock has bounced back. So I would suggest that he can trail with a stop loss below 237 levels. And on the upside, if the stock is unable to breach the 280 level, then he can look at booking profits around 270, 275, and balance he can hold with a trail below 237.
Okay, that's Midhani, which is also up about 6% in trade. Let's take ITC. This query is coming in on Facebook from Nikesh Chinu. He wants a view on the stock for the week. So he basically wants a technical view. Amar, on the charts, ITC, I think, which has been a little bit resilient. Even on Friday, we didn't see much of losses coming by, but it's been a laggard for the longest time. What sort of levels would you monitor here? Is there any position that someone can take for the week?
See, ITC overall, if you look at the charts, continues to be extremely weak. However, what we are seeing is that the stock has formed some sort of support around 190, 192 odd levels. But again, on the upside, the stock is unlikely to trade consistently above 208, 210. Only if it manages to sustain above 208 and 210, then we could say that there is a trend change in the stock. Otherwise, I would say rather stay away from it.
All right. We have a viewer who wants a take on the specialty chemical sector. Rajan Shah wants a view on the specialty chemical sector for 2020. Gaurang, how are you viewing this sector right now, and anything that you like in this specific sector?
So, Agam, the fallout of coronavirus and its impact on Chinese economy, especially the specialty chemicals, is visible loud and clear. And even much before that, when the trade war between US and China initiated, I think specialty chemicals as a sector was one of the top performing, wherein most of the Indian based specialty chemical companies got the benefit of larger footprints globally. So we have a couple of names in the specialty chemicals sector that we like. Viniti Organics, PI Industries, Aarti Industries, Pidilite, if you will, UPL, and Tata Chemicals. I think these would be the preferred investment ideas, but not from a 2020 year-end point of view. I would request the investor to stretch the time horizon to maybe 1.5 to 2 years to get better and larger benefits.
Okay, so those are some picks coming in from the chemical space from Gaurang's side. Gaurang, I'm going to come back to you, and I'm just clubbing few queries because they seem to be on the similar lines. You've got Divit Dalmia, who's bought Tata Motors at 573. Then you've got Naveen Gupta, who's bought 1,000 shares of Motherson Sumi at 205. And these are the prominent laggards in the auto Ang space. Fundamentally, they are long-term investors. What they want to know is, should they look to average their investment at these lower levels for Tata Motors and Motherson Sumi?
So purely with a 2.5 year plus kind of time horizon, I would advise both of them to average Tata Motors as well as Motherson Sumi. And the reason why I say this is because, large part of the balance sheet contribution comes in from the overseas market, as we all know, Navneet. And the situation that exists currently, I don't think one should bet on these stocks purely from a short to medium term point of view. But if you have a long-term time horizon, like I mentioned, about 2.5 years plus, then I think a lot can improve both globally as well as the contribution that would come into these companies' balance sheet. So with that kind of, and given the fact that both of them got invested at a much elevated level, and these corrections should be used as adding to the investment that they already have. But keep patience and have a stretched out time horizon.
Okay, we have a question from Sagar Damani. Wants a technical view on CEAT at current market levels for the short term. What can we do with this one? Let's pull that up. It's currently at 1,027. We saw some traction in tire stocks before. Of course, we saw the sharp correction because of coronavirus. But Amar, how are you reading into CEAT right now? What would your advice be to Sagar?
Yeah, I would say that looking at CEAT technically on the charts, on the short term, intermediate as well as the long term, it's clearly a range play. And on the downside, we are seeing somewhere around 950, 960. That's a crucial zone of support. On the upside, around 1060, 1080 is a zone of resistance. So this is a range play till the time we don't see the stock consistently sustaining above 1070, 1080. I would say it's a range. So any dips he can look at buying with a stop loss below 950 and a target on the upside towards 1070 levels.
Okay, that's it for you, 1026. It's already given up the morning gains. Puneet Sharma writes to us about 1,000 shares of BEL, that's Bharat Electronics, once again at a really higher level of 180. He's a long-term investor. I also want to highlight JP Morgan had come out with a report today on BEL. They've upgraded the stock to overweight with the target price of about 97. They've said that the phase of earnings decline could be behind for the company, and a defensive play again can be a good defensive play against coronavirus. Gaurang, if I could come to you in BEL, the buy price is really high. It's at 180. Once again, a long-term investor, what would you advise? What should be the ideal strategy here now?
So my humble request would be to average. And again, this is also a good proxy play in terms of the way things are panning out for Make in India defense-related sectors. And this company makes some of the niche and marquee equipments that our armed forces require. And not only that, they provide logistics also in terms of high technique and precision equipment. Along with that, they also make surface-to-surface surface-to-air missiles, radar system, etc. We remain positive, and in fact, with a 2-year plus time horizon, I would not be surprised to see the stock surpassing 125, 130. But this also would require a lot of patience and a long-term time horizon.
Okay. Well, we have two viewers on YouTube who want a technical view on Havells India. Let's pull that up and see where it's currently trading at so that we can take it up with Amar. It's currently at the 640 odd levels. It's up 4.5% today. Some strength returning to this one. Amar, what is your suggestion on Havells India?
See that this stock, from a long-term perspective, it is on the upside. And on the daily charts, what we are seeing is towards 650, 655 is a crucial zone of resistance. So ideally, there the stock is going to run into some sort of resistance and profit booking. On the downside, the stock seems to have definitely formed a base, a double bottom, because we are seeing higher tops and bottom formation in the stock on the daily chart. So that clearly shows that the worst seems to be over for the stock. But for any major rally, the stock needs to sustain above 650, 652 levels.
Okay, that's Havells India. A lot of market participants off late saying all the negatives seems to be priced in for the stock. Let's see if the up move continues or not. Let me take a query on L&T Finance Holdings. This one's from Krish Loya. He's bought the stock at levels of 130 and he wants to know if he should look to exit or hold, as it's now trading below his entry level of about 130. Amar, I come back to you. 130 is the entry, 105 is where the stock's trading. What would you advise?
Yeah, I would say that he should hold on to his position and not exit at the current levels. The level that he needs to watch out for is 108, 110. If the stock sustains above 108, then the stock would more or less imply that a short-term bottom has been formed. So he should hold on to his position.
Okay, Manish Money wants a long-term view on Ashok Leyland, which is currently at, if I'm not mistaken, around 75 rupees a share. Manish Money has entered into Ashok Leyland at a little over 100 rupees a share. Gaurang, what should he do? Of course, his time horizon is for the long term.
So this is a pure commercial play, and in fact, we remain positive on Ashok Leyland. The only policy that we would eagerly wait to come out from the government side is the scrappage policy. And once we have that, I think all the commercial vehicle manufacturing companies like Ashok Leyland, M&M, Tata Motors should do significantly well as far as their CV segment contribution is concerned. So from a long-term point of view, my advice would be to hold on, and even average at 75, your downside is very, very limited.
Okay, Ashok Leyland last 1 month is down about 3 to 3.5%. An interesting query coming in from Praveen Matthews. Amar, I'm going to come to you for this one. He wants a technical view on Bajaj Finance, and he's also asking at what levels to add Bajaj Finance into as a new position into his long-term portfolio. And he also wants to know if somebody is giving a stop loss, how to monitor that stop loss for a long-term investment. Should it be on weekly basis, monthly basis, and also is it on intraday or on closing a level basis? So if you could advise him if current levels are good enough to enter into Bajaj Finance and how to monitor the stop loss.
Yeah, looking at Bajaj Finance, what we are seeing is that this stock continues to be definitely very strong on the long-term chart. So it clearly implies that pullbacks should be used as a buying opportunity. And secondly, what we are seeing is that as far as what are the levels one should ideally look at buying. So somewhere around 4,200, 4,300, that's a crucial zone of support for the stock. So there ideally any pullback can be used as a buying opportunity. As far as stop losses are concerned for long-term trades, you can't place them based on daily charts. You'll have to go back on the weekly charts, and there you'll have to place based on the crucial previous bottoms which have been formed. So for example, talking about Bajaj Finance, it has got a major support level somewhere coming below 3,900 odd levels. So those are the levels you'll have to look at buying. So the closer you buy to the stop loss, the better off you are, and the risk reward increases significantly. So yes, this stock is in a secular bull trend. Corrections definitely should be used as buying opportunity.
Okay. Gaurang, a couple of questions. A couple of viewers want a view on HDFC AMC as well. It hasn't really moved as such, but what would your advice be? Especially one viewer wants your take on valuations as well.
So since the time it got listed, Agam, it has moved like a tornado, and I hope you'll agree with this. And I think the floor price was somewhere close to about 1100, went up to 1800. Then we had the cap on expense ratio. Stock corrected to about 1300, 1400, and then it touched 3600. Correct me if I'm wrong, which was its all-time high. Well, it's a very niche and marquee play, and as more and more participants get involved into investing into stock market, especially via the mutual fund route, I think established players like Hdfc Amc would always command a premium in terms of their performance. And on the earnings front, well, I have no doubt whatsoever that over a longer period of time, this company would emerge as one of the top performing companies. And as a disclosure, we had advised, subscribe to the IPO, and post that we have a standalone buy recommendation from a long-term point of view on Hdfc Amc.
Right, so that's a bullish view coming in on Hdfc Amc, and yes, of course, since the listing time, the stock's done pretty well. Let me take query of Akshay Mittal, who has a query on Larsen & Toubro. He's been holding the stock at 12.95. He wants to know if he should look to book losses and then switch to something like Relaxo or Bata. Amar, would you advise him to book losses and switch to something like Relaxo or Bata?
I would suggest that he should hold on to his position. He would get an opportunity most likely to exit his position, because the low that the stock had made recently, that was on Friday, that's a very strong support zone. So ideally, if the stock sustains above 1220, 1230 levels, he can hold on to his position.
Okay. Gaurang, if you can come in on how to choose between AU, Small Finance, Ujjivan and Equitas Holdings. I reckon all these are microfinance companies. How would you choose among these? We have a question from Amrinder Rekhi.
So I will restrict my comments to Ujjivan and AU Small Finance, since we have a coverage. But between the two, Equitas we don't cover, so I would not comment on that. So between Ujjivan and AU Small Finance, post the small finance businesses getting hived off and listed as a separate entity, the attraction towards AU Small Finance has grown much larger. And in terms of earning also, it has actually outperformed the sector as well as the peers in the same sector. So if you have to pick one MFC, that is microfinance company, then I would advise the investor to go for AU Small Finance.
Okay, so AU Small Finance is a preferred pick in the microfinancing space. Nikesh Chinu writes to us on Facebook. He's holding Deepak Nitrite for long term. His entry level is about 376. Basically, he wants to know if he should hold on to his investment. Gaurang, you've already given your view on a couple of these chemical companies. Does Deepak Nitrite, feature in that list where somebody should hold on to the investment if they're making money?
Well, unfortunately, we don't cover the stock, Navneet, so I can't comment. But before the correction came in, it was one of the top performing stocks in the sector. Unfortunately, we don't cover the stock, so I can't comment.
Okay, well, it's time to get in our rapid fire segment, and once again like to request our experts to keep their answers as short as possible so as to accommodate as many queries as possible. Amar, the first question is on Z Entertainment. We have a viewer who has written the 260 call. What's your take?
I think he should book his profits because the stock seems to be bottoming out.
Gaurang, if somebody is holding Atul Limited since the IPO time, 20 shares, what would you advise? To stay invested or put money somewhere else?
If you're not in need of the money, stay invested. And if you have made enough, which I am sure he would have, then maybe you can book some part profits and switch on to the sectors and stocks that I have recommended during the show.
Amar, Akshay Mittal wants to enter Ipca Laboratories. Would you recommend doing so? If yes, what levels would you watch out for?
Yeah, Ipca Laboratories, definitely any pullback should be just buying opportunity. Levels to watch out for is somewhere around 1300, 1280, 1300 is a good level to watch out because the stock has resistance around 1500 levels.
Amar, a technical view on PTC India, how is it looking on the charts?
Yeah, talking about PTC India, what we are seeing is that the stock seems to be bottoming out. There is some sort of bullish divergence, but still stay away till the time we don't see the stock consistently sustaining above 42 levels, 52 levels.
Okay, Gaurang, we have a viewer who holds a very large chunk in Akzo Nobel. His entry price is 2,050. What would you do? It's currently at 2,400 rupees a share. What's your view on Akzo Nobel?
So this is also one of those specialty chemical stroke paint related plays. And like I mentioned earlier, please do not overexpose yourself to a particular stock or a sector. We remain positive on Akzo Nobel from a long-term point of view.
Okay, Gaurang, choose one between IGL and Gujarat Gas, which is looking good from a longer-term perspective.
This is difficult. We remain positive on both, but if I have to pick one, IGL would be the one.
Okay, Amar, can you come in on Ashoka Buildcon? We want a 6-month view on Ashoka Buildcon.
Yeah, Ashoka, I would say, is currently trading around 92, 93 odd levels. So I would say that the trend overall is negative, so rather stay away.
Okay, all right. We are out of time on this show, guys. So that is all that we have on this edition of our Speak. I'm going to take a moment to thank both our experts, Gaurang and Amar, for helping our viewers with their queries.
Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address at least most of them through our shows. In fact, for all previous episodes, you can visit our YouTube channel or our website, BloombergQuint.com. Thanks for watching. Stay tuned to BloombergQuint for more news and updates.